Welcome to the Fear and Greed Weekend Edition, the week that was, a wrap of the biggest stories over the past 7 days. I'm Sean Aylmer. It was a big week for earnings, big week for COVID, the crisis in Afghanistan, and truckies. Starting with financial markets, it was a pretty ordinary week locally for equities. While earnings season continued, and generally companies reported strong profits, the outlook statements weren't so positive because the management of most companies just don't know what's going on at the moment due to lockdowns. The market ended the week about where it started, and the S&P ASX 200 looks to be stuck at or a bit below 7,500 points. Wall Street had no such concerns and kept hitting new records, confident that the global economic recovery was underway. While Australian investors are fixated on COVID cases, North American and European traders have moved beyond case numbers, knowing the coronavirus is with us to stay. They're more interested in reopenings and managing to live with COVID, and that's freed them up to buy stocks. That confidence fed through to other financial markets. Oil prices were up sharply over the week. Not good news for petrol prices, but a positive sign for global growth. Iron ore prices tumbled late last week and into this week, but then picked up again. In fact, many commodities, including copper, which is considered a barometer of economic activity, bounced in the second half of this week as the economic outlook improved. The Aussie dollar started the week at its lowest level since November last year, on the back of weaker commodity prices and a stronger US dollar, but it has steadily, albeit slowly, climbed throughout the week. Trading in the 72s is a good thing for the local economy, certainly better than trading in the 78s. Cryptocurrencies had a revival this week, with Bitcoin touching the $50,000 a unit level. In local news, it was a week when truckies went on strike. Thousands stopped work yesterday, the first national strike in more than a decade. It was all over the use of external hires and cutting overtime for part-timers. In the COVID economy, when home delivery is all important, truckies have quite a bit of sway. It was also the week that Kerry Stokes, one of the country's most successful business leaders, alongside the likes of Rupert Murdoch, Kerry Packer and Andrew Forrest, announced his retirement. The 80-year-old billionaire chair of Seven Group will step down in November. There wasn't a lot of economic news around. We're waiting for next week for that. The main data came on capital expenditure. Businesses were spending again during the June quarter, which is great news. We now await official growth figures next week. There's a chance that the economy went backwards during the 3 months to the end of June. Given the September quarter is definitely going backwards due to lockdowns, a double-dip recession is on the cards. The Future Fund, which every one of us own, has grown to $197 billion after delivering a 22% return for the last financial year. The sovereign fund's performance was its best since it was set up back in 2006 in the Howard Costello years. In overseas news, the crisis in Kabul continued, with mercy flights to evacuate foreigners and Afghan nationals ongoing. More than 100,000 people have now fled the capital over the past fortnight, including 4,000 on Australian air flights, as the Taliban takes control. The situation worsened yesterday when a terrorist attack killed at least 13 American soldiers and dozens of civilians on the airport perimeter. US President Joe Biden, who has defended his decision to withdraw troops, promised retaliation. This week, China said it had stopped COVID-19, including the Delta variant. Mind you, it was pretty tough love. In cities where the Delta variant was discovered, harsh lockdowns were instituted, more than 100 million tests were administered, quarantines were put in place, and trains and planes were cut. Korean tech giant Samsung unveiled a strategy to hire 40,000 people over 3 years as it pushes into next-generation technologies, particularly telecommunications and robotics. And New Zealand reported its first case of COVID, centred in Auckland, since April last year. The Delta strain is likely to have come from Sydney, and the country went into lockdown. Unfortunately, case numbers have risen ever since. It's earnings season, and that means plenty of corporate news around the place. Qantas said it had made a $2.35 billion loss last financial year, taking to $5 billion the amount it's lost over the past 2 years. But it hopes to start flying overseas, namely the United Kingdom, North America and parts of Asia, by the end of the year. That aligns with the Prime Minister's timetable and depends on the vaccination rollout. Ever-optimistic Chief Executive Alan Joyce said the group had almost $4 billion in the kitty to protect against further shocks. Wesfarmers said its underlying profit was better than expected and will return $2.3 billion to shareholders. In no surprise to anyone, Wesfarmers subsidiaries, Bunnings, Officeworks and Kmart all reported strong results. Spark Infrastructure agreed to sell to a consortium including private equity fund Kohlberg Kravis Roberts and the Ontario Teachers Pension Fund for about $5 billion. Infrastructure assets are all the rage at the moment. They provide long-term, steady income and often returns are regulated and linked to inflation. Ampol bid around $2 billion for New Zealand fuel retailer Z Energy, just as the last oil refiner in that country closes. The deal would allow Ampol to sell refined petrol into New Zealand and provide the group with much larger scale as it transitions to a more environmentally friendly operation, a significant challenge for an oil and gas company. Crown Resorts announced its new chair will be the beautifully named Ziggy Switowski, replacing Helen Coonan, and Chief Executive Steve McCann will relocate to Melbourne and also run the flagship gaming site in Southbank. Of course, the group is waiting and negotiating around its licences in New South Wales, Victoria and Western Australia. I won't run through all the results this week, but we'll pick out a few interesting trends. Insurer NIB Holdings did well because it didn't have to pay out on claims due to elective surgeries being down on the back of COVID. But it expects a surge when lockdowns end, meaning it will have to pay more in the future. That triggered an 11% drop in its share price. Sonic Healthcare is now the world's third largest pathology group, performing 30 million COVID tests in the past financial year. Needless to say, financially, it had a very good year. Nine Entertainment's share price tumbled after new CEO Mike Sneesby outlined higher costs for its television division and streaming service Stan. There are so many streaming services available right now, I wonder how they're all going to make money. Scentre Group, owner of Westfield shopping malls, complained that rent relief laws allowed companies with large turnovers to escape paying for their sites, and Scentre Group is suffering. I have some sympathy on this one, keeping in mind that many of us own those massive property groups via our superannuation funds. Smash Repair Group AMA stood down 190 staff as COVID-19 diminished the number of cars on the road. Fewer cars, fewer accidents, less business for Smash repairers. There are plenty of similar examples during the week of COVID impacting companies in diverse ways. Plumbing group Reliance Worldwide is struggling to get parts shipped into Australia. Kogan.com said bigger supply chain and warehousing costs had hammered earnings. Protective equipment maker Ansell said there's a global oversupply of single-use gloves, along with temporary factory closures in Asia. And Blackmore's share price surged after the vitamin seller said it was doing well in China. But A2 Milk slumped after it said turnover to the world's second largest economy had slumped. Now I get to the point in the program where I go through the biggest story of the week, the sleeper story, the most remarkable story, and of course, my favourite story. The biggest story of the week was all about COVID, but it was about reopenings rather than closings. The numbers in New South Wales remained shocking. Close to 7,000 people have been recorded as having the virus in the past 5 days. The numbers in Victoria had stabilised, although yesterday's case levels were high. Cases in the ACT look to be steady, that's good news, and Queensland continues its run of 0 cases. But at least New South Wales Premier Gladys Berejiklian is outlining a path to normality. She can because vaccination rates are rising quickly. Under the National Cabinet plans, restrictions can be eased slightly at 60% vax rates, more substantially at 70%, and something close to a free society at 80%. While there remains recalcitrance, West Australian Premier Mark McGowan, take a bow. Most leaders, including Ms Berejiklian, Prime Minister Scott Morrison and Victoria's Daniel Andrews, are now focusing on getting vax rates up and their economies reopened. Keep the vaccinations rolling. The sleeper story of the week comes from Woolworths. Chief Executive Brad Banducci outlined just how hard it was to run a business during lockdowns and movement restrictions. Around 3,300 Woolies staff are in isolation, and around 10,000 will be impacted by new rules in New South Wales about being vaccinated if you live in a hotspot. Many staff have to contend with working in stores listed as exposure sites. Woolies is finding it hard to keep its shelves stocked. The stress on staff is enormous. On top of that, online demand is huge, and there's up to a 4-day waiting period for customers on deliveries. Now, Woolworths isn't crying poor. It announced a 20% jump in net profit to $1.5 billion for the last financial year and will undertake a share buyback worth $2 billion. But the toll COVID is taking on everyday Australians, irrespective of whether they've contracted the virus, became very evident this week through Woolworths results. The most remarkable story came from the two big buy now, pay later groups. Afterpay and Zipco both reported bigger than expected losses, having had to upspend on marketing in the US, where both companies are targeting customers and merchants. As time goes on, I'm becoming a little bit more negative on some of these companies. Having said that, US payments giant Square, led by Twitter's Jack Dorsey, is paying $39 billion for Afterpay, so there must be something in them. But what I find remarkable is the growth in numbers. Afterpay now has 16 million customers and handled $21 billion in sales last financial year, yet lost $159 million. Zipco lost money, notwithstanding it had 7.3 million customers handling $5.7 billion. Clearly, margins are thin, very thin, and these are young companies still building. But there is so much competition in the sector, and I think it's remarkable how highly valued they are. There's a special mention in this category for logistics business WiseTech. On Wednesday, its share price jumped more than 50% in 90 minutes after announcing a somewhat better than expected result. It triggered a halt in trading. Company founder Richard White owns 40% of the stock, and in about 90 minutes, his wealth increased by $2.75 billion. Not bad. When WiseTech resumed trading, its share price fell back, but still ended up nearly 30% higher on the day. Remarkable. My favourite story of the week came from hearing implant group Cochlear. In its results, it emerged that the wearing of masks around the world had boosted Cochlear's business. Why? Because many people are hard of hearing and instead lip read when conversing with others. Many don't even know they're doing it. With the introduction of masks, thousands of people have had to acknowledge that their hearing ain't so good and have looked for hearing implants. It's another example of how COVID has changed the world. Moving on to this week's interviews, Monday's interview was a cracker. I spoke to well-known share market analyst Roger Montgomery about buying discretionary stocks from JB Hi-Fi and Kogan to four-wheel drive accessories maker ARB. On Tuesday, I spoke to Peter McGregor from True Infrastructure about investing in, you guessed it, infrastructure, things like transport, renewables, utilities and energy. ANZ Chief Economist Richard Yetsenga was my guest on Wednesday. I got Richard's take on what's ahead of us in the next few months, where unemployment will end up, what will happen to house prices, and of course to the economy. I really enjoyed Thursday's conversation. It was with University of Sydney Professor of History, James Curran. We talked about why no political leader has yet been able to deliver the knockout speech and provide leadership around COVID. And finally, yesterday's interview was with the chief smuggler himself, Adam Linforth. The boss of Budgie Smuggler, the swimwear group, spoke about how an idea over a few beers in the backyard became a thriving business. It was indeed a very, very big week. If you want to listen to any of the interviews or indeed any of the shows over the past week, all are available on your favourite podcast platform or at fearandgreed.com.au. And don't forget that tomorrow I'll be back with Michael Thompson and Adam Lang in the Fear and Greed virtual studio to have a bit more of an in-depth look at some of the news around the place. Join us then. I'm Sean Aylmer. Have a good Saturday and a great weekend.